The precious metals market is changing rapidly, and supremacy is being sought after with China. I'm going to tell you about two things that are happening right now that will shake the foundations of the Western gold market as we explore. China's largest state-owned bank plans to open a precious metal depository at Hong Kong International Airport, reports Bloomberg, offering a boost to both the lender's trading operations and the city's ambitions to become a global gold hub. The local unit of Industrial and Commercial Bank of China has leased space at the airport's vault, according to people familiar with the deal. The bank aims to get the depository ready in the next few months, in declining to be named discussing a private matter. But nonetheless, the move dovetails with the Hong Kong government's intention to develop the city's clout in the gold market. Chief Executive John Lee has pledged to increase capacity for holding bullion to more than 2,000 tons over the next 3 years and establish a central clearing system for the precious metal. The Shanghai Gold Exchange has been at the forefront of that effort, having set up its first offshore vault in the city and launched 2 contracts for international investors. ICBC is a clearing member of the exchange and the mainland's main venue for trading bullion. The Hong Kong government has invited the Shanghai Gold Exchange to participate in the clearing system it's setting up, and ICBC's unit in Hong Kong wants to be a member of that as well, according to the people. The bank already runs a vault linked to the SGE in neighboring Shenzhen and has taken steps to expand its Hong Kong team and deals in bullion to help lift trading activity in the city. The bank's leasing deal released its blueprint last year that called for capacity at its vault to rise to initial 200 tons from 150 tons before a phased expansion that would take the space of 1,000 tons. So they're setting themselves up. This is part of the de-dollarization effort and to try to gain dominance in the gold market. We're already seeing more separation between the East and West, and that's just one story. Wait to hear about the next story. The United States and China are battling over mineral supply chains and the technology supremacy because globalization stepped out of equilibrium. The U.S. uses tariffs and deregulation to secure domestic resources. China harnesses monopoly at scale and reserves to their advantage. Today, I want to show you a company that is trading at 2025 lows right now, down nearly 70% from its first quarter highs. The sponsor of today's video is Giant Mining Corporation, ticker symbol BFGFF. This ticker symbol is available on Interactive Brokers and Charles Schwab, among others. Since President Trump's inauguration, his administration has aggressively pursued policies to secure U.S. mineral independence, with copper emerging as a flashpoint in escalating tensions with the Chinese Communist Party. Copper, vital for defense and AI infrastructure, underscores America's vulnerability to foreign dominance, particularly China's control over global refining. In February, the president initiated a Section 232 investigation into U.S. copper imports and classifying the nation's dependence on foreign suppliers as a potential national security risk. It identified a significant U.S. trade deficit and overcapacity from state-subsidized Chinese copper production, leading to a July presidential proclamation that imposed 50% tariffs on semi-finished copper products effective on August 1, 2025. On October the 6th, Trump approved the Ambler Road project in Alaska, unlocking access to rich copper and zinc deposits and facilitating the permitting of more than 1,700 mining claims. In August, the U.S. Department of Homeland Security expanded enforcement of the Uyghur Forced Labor Prevention Act to include copper, designating it as a high-priority sector for supply chain scrutiny. On August the 26th, the U.S. Department of the Interior and U.S. Geological Survey released the draft 2025 critical minerals list, proposing to add copper, along with potash, silicon, and silver, as newly designated critical minerals. One of the most famous mining billionaires said about copper, the world needs astronomical amounts of copper over the next 20 years, and said there's no rational price for copper when the metal is essential. So effective on August the 1st, the copper sector entered a ground floor seismic level opportunity, marking the beginning of a transformative new phase for the entire industry. Giant Mining, ticker BFGFF, owns a fast-producing copper mine in Nevada, one of America's best and most cherished mining jurisdictions. The most critical part of all of this is that Giant Mining's share price has still not recovered at all from the April market shock. Historic underground mines at the Majuba Hill Project produced copper, tin, silver from the early 1900s to the 1950s. Giant Mining is the best copper explorer right now, and the infrastructure is all ready, with access roads, power supply, transportation, water supply, ore stockpiles, and established power and road access and space for potential processing infrastructure as the project advances. So do your homework on Giant Mining with the ticker symbol BFGFF. Now, the other story I want to share with you is what Cambodia has just announced. Cambodia wants to store its gold in China, boosting Beijing's bid to build global bullion hub, according to the Business Times. Cambodia is set to become one of the first countries to store gold with China, according to people familiar with the matter, marking early progress in Beijing's push to develop a global bullion hub to compete with the LBMA. The Southeast Asian nation is planning to store some of its reserves in a vault registered with the Shanghai Gold Exchange in Shenzhen's bonded zone, the people said, requesting anonymity because the matter is sensitive. A few other countries have also expressed interest as they weigh the benefits of diversifying the reserves from traditional hubs like London. Beijing is keen to become a custodian of other countries' gold as it seeks to establish a global financial system less dependent on the U.S. dollar and Western centers. Its deal with Cambodia involves storing new purchases of bullion rather than relocating metal from existing stockpiles, the people said. Central banks ultimately oversee a country's reserves. The governor of the National Bank of Cambodia said last month that a few locations were under consideration for storing the nation's gold, although she wouldn't be drawn on whether China was one of them. But again, the few locations, but nonetheless, it sounds like China is going to be one of them. Cambodia's central bank holds about 54 tons of gold, accounting for a quarter of its $26 billion worth in foreign exchange reserves, according to the World Gold Council's latest assessment. The National Bank of Cambodia was not immediately available for comment on this matter, as was not the People's Bank of China. Nonetheless, this is another step towards the establishment of a hub in that part of the world. You know, when you got Hong Kong, Beijing, and all China controlled, you know it's something for sure. You know, gold prices have been on a rise this year, in large part due to its function as a safe haven in times of economic and geopolitical stress. The Chinese government, which is chafing at the dollar's dominant role in the global financial system, has built up reserves of the metal as a counterweight to the U.S. currency, and that is de-dollarization. Yes, indeed. And we did see after Xi Jinping met with Donald Trump in South Korea on October the 30th, China released a statement on the landmark summit's outcomes, while the U.S. officials made public remarks, but later published a fact sheet. China's Commerce Ministry is on its biggest public hiring spree this decade, bolstering unit overseeing rare earth curbs, even as it pauses sweeping measures in a trade truce with the U.S. That's what we're looking at here. It's fascinating. China has spent $468 billion on drilling and exploration since 2019 to reduce its reliance on foreign energy sources. I'm telling you what, this is why it's good for us here in the United States to be our own energy independent resource, such as with copper and other rare earths and gold too. Nevada's a big state for gold as well. So very fascinating indeed. Chinese-owned mining firm MMG Limited $500 million purchase of Anglo American's PLC Brazilian's nickel business has been hit by an in-depth European Union probe after regulations waned and the deal threatens to block stainless steel industry. Of course, Brazil is ground zero for the biggest acquisition of gold in September of 2025. That's a pretty big deal as we see other things moving. And this sort of split between West and East and deglobalization in a sense. And this is part of all that. So it's very fascinating. It'll be very interesting to see how this plays out. But there it is. Those are the two stories that I think will shake the foundations of the Western global market indeed. And I think really the global market in general, global gold market in general. So we'll see how this all plays out. Let me know what your thoughts are down in the comments section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.